The United States and China have been locked in a trade war for the past few years. This has created uncertainty in the global economy. However, there is a glimmer of hope. On May 12, 2025, the two countries agreed to a 90-day tariff truce. This means that tariffs on certain goods will be reduced for a period of 3 months. The U.S. has agreed to lower tariffs on Chinese goods from 145% to 30%. China has agreed to lower tariffs on U.S. goods from 125% to 10%. This is a significant development. It has the potential to ease trade tensions between the two economic giants. This truce is a positive step. It shows that both sides are willing to negotiate. However, it is important to remember that this is just a temporary measure. The underlying trade disputes between the two countries remain unresolved. The 90-day period is a critical window. It provides an opportunity for both sides to find common ground. The world is watching closely. The outcome of these negotiations will have a significant impact on the global economy. The negotiations leading up to the tariff truce were complex and delicate. They involved high-level officials from both the U.S. and China. The initial talks took place in Geneva, Switzerland. Leading the U.S. delegation was Treasury Secretary Scott Bessent. The Chinese delegation was headed by Vice Premier He Lifeng. Both sides acknowledged the need to find a way out of the trade impasse. The negotiations were marked by a sense of urgency. The global economy was feeling the strain of the trade war. President Trump characterized the talks as friendly. This was seen as a positive sign. It suggested that both sides were willing to work together. There were rumors of a phone call between President Trump and Chinese President Xi Jinping. However, these were never confirmed. The negotiations were not without their challenges. There were moments of tension and disagreement. However, both sides remained committed to finding a solution. The 90-day tariff truce is a testament to their willingness to compromise. The news of the tariff truce was met with a wave of optimism in global markets. The Dow Jones Industrial Average, a key indicator of U.S. stock market performance, surged by 1,100 points. This represented a significant 2.5% increase. Other major stock market indices also reacted positively. The S&P 500 rose by 2.9%, moving closer to its all-time high. The Nasdaq Composite, heavily weighted towards technology companies, experienced a surge of 4%. This pushed it to a 2-month high. The positive market reaction reflects the belief that the tariff truce will boost global trade. Investors are hopeful that this will lead to increased corporate profits. However, some analysts caution that the market's enthusiasm may be premature. The 90-day truce is just the first step in a long and complex process. The underlying trade disputes between the U.S. and China remain unresolved. It is still too early to say whether this truce will lead to a lasting trade deal. The tariff truce has sparked a debate among economists and trade experts. Some view it as a breakthrough. They believe it will pave the way for a comprehensive trade deal. Others are more cautious. They argue that the truce is merely a temporary reprieve. Dan Wang, an analyst at the Eurasia Group, believes that the truce represents transactional de-escalation. Both sides, he argues, are primarily interested in securing short-term gains. Stephen Olson, a former U.S. trade negotiator, is more skeptical. He believes that the tariff cuts are likely to be minor. The systemic frictions between the U.S. and China, he argues, will persist. Eswar Prasad, former head of the IMF's China division, shares this cautious view. He points out that significant issues remain unresolved. These include intellectual property rights, forced technology transfers, and China's industrial subsidies. The 90-day truce, he argues, is simply a pause in the trade war, not an end to it. The divergent views among experts highlight the uncertainty surrounding the future of U.S.-China trade relations. The 90-day truce is a positive development. However, it is important to manage expectations. A lasting trade deal will require significant compromises from both sides. Section 5. The Human Cost of Tariffs. Stories from the Front Line. While the trade war is often discussed in terms of economic indicators and market fluctuations, it is crucial to remember the human impact of tariffs. Behind the statistics are real people and businesses whose lives have been directly affected by the trade dispute. Take, for example, the American farmer who has seen demand for his soybeans plummet due to Chinese retaliatory tariffs, Or the single mother working in a manufacturing plant that has been forced to lay off workers due to rising input costs caused by tariffs on imported components. In China, the trade war has also had tangible consequences for ordinary people. Consumers have faced higher prices for imported goods, while workers in export-oriented industries have experienced job losses and wage cuts. The stories of these individuals highlight the real-world consequences of trade barriers. Tariffs, while often touted as a tool to protect domestic industries, can have unintended and negative repercussions for consumers, workers, and businesses on both sides of the trade divide. Section 6. Business casualties when trade barriers bite. The trade war has not only impacted individuals but also left its mark on businesses of all sizes. Small and medium-sized enterprises, often operating on thinner margins, have been particularly vulnerable to the disruptions caused by tariffs. Wild Rye, a UK-based business specializing in women's outdoor clothing, exemplifies the challenges faced by SMEs caught in the crossfire of the trade war. The company, which sources some of its materials from China, saw its shipping costs skyrocket from £200,000 to £1.2 million due to tariffs. Larger corporations have also felt the pinch. French shipping giant CMA-CGM reported a 50% decline in US-bound volume since the trade war began. This sharp decrease in shipping activity reflects the broader slowdown in trade between the two countries. The trade war has forced businesses to adapt, often at a significant cost. Some have been forced to relocate production, while others have had to absorb increased costs, eroding their profit margins. The uncertainty surrounding the trade dispute has also made it difficult for businesses to plan for the future. Section 7. Beyond the 90 days, the long road ahead. The 90-day tariff truce provides a much-needed respite in the US-China trade war. However, it is essential to recognize that this is just the beginning of a long and complex process. Significant challenges remain, and the path forward is fraught with uncertainty. One of the key challenges will be addressing the underlying issues that led to the trade war in the first place. These include concerns over China's trade practices such as intellectual property theft, forced technology transfers, and state subsidies for domestic companies. Another challenge will be bridging the trust deficit that has developed between the two countries. The trade war has strained relations, and rebuilding trust will be crucial for any lasting trade deal to be reached. The negotiations will require both sides to make concessions and find common ground. The U.S. will need to be willing to compromise on some of its demands, while China will need to demonstrate a genuine commitment to addressing the concerns raised by the U.S. and other trading partners. Section 8. Challenges and opportunities in a new trade landscape. The US-China trade war has ushered in a period of heightened uncertainty in the global trading system. The rules-based order that has governed international trade for decades is under strain, and the future of globalization is uncertain. This new trade landscape presents both challenges and opportunities. On the one hand, the trade war has highlighted the vulnerabilities of global supply chains and the risks of relying too heavily on a single trading partner. On the other hand, the trade war has also created opportunities for other countries to step in and fill the void left by the US and China. Countries like Vietnam and Mexico have benefited from companies seeking to diversify their supply chains and reduce their exposure to the trade dispute. The trade war has also accelerated the trend towards regional trade agreements. The Comprehensive and Progressive Agreement for Trans-Pacific Partnership and the European Union-Japan Economic Partnership Agreement are two examples of such agreements that have gained momentum in the wake of the trade war. Section 9. A fragile peace. Hope for a brighter future. The 90-day tariff truce between the US and China is a fragile but important step towards de-escalating the trade war. While significant challenges remain, the truce provides a glimmer of hope that a more comprehensive and lasting trade agreement can be reached. The world is watching closely as the two economic giants navigate this delicate dance. The stakes are high, and the outcome of these negotiations will have far-reaching consequences for the global economy. A successful resolution of the trade war would not only benefit the US and China, but also provide a much-needed boost to the global economy. It would signal a return to multilateralism and a commitment to resolving trade disputes through dialogue and cooperation. However, if the truce unravels and the trade war resumes, the consequences could be severe. It could lead to a further slowdown in global growth, increased protectionism, and heightened geopolitical tensions. The path forward is uncertain, but the 90-day tariff truce offers a sliver of hope that a brighter future for US-China trade relations and the global economy as a whole is within reach. Thank you for watching. Please like and subscribe for more updates.